Alright, hello guys, and glad to have you on board again today. You know what time it is, so let's jump in. First things first, I'll eventually consider releasing an update video on the Binance stuff, whatever. I think it might be required. I couldn't find the time to record it in English yesterday. I'll eventually do my best to have it handled today. Despite that, same old story. We close all of these thoughts. We don't let ourselves being influenced by the news flows and stuff like that. As we are flow traders in here, we just boringly do our low risk analysis, trying to figure out the structure of the flow tradings and just boringly apply the rules. So the rules have been going straightforward when it comes to the S&P 500. I know there were so many bears out there. This rises for bad reason, AI mania, whatever stuff you might hear along the web. Remember, you don't pay attention to this. When you do these flow trades, just be dumb as fuck. Though the thing in here is that we knew what to do with it, to buy into this area. Remember, the flow are in the lower time frame, so we were buying the second flow in here on the Bollinger Band, following the third range boundary. We've broken the previous high points. That's the same old story all over the place. Remember, that's the same old game repeating itself. So we've had the first flow, we've had the third range boundary, we bought in here in the Bollinger Band, not the moving average, and then next stage was to break the previous high point, which means stops were set at break even, and then we had the second flow triggering, which should trade above the rising moving average, and that's exactly what we have. If we go for the H1 time frame, you would see now that we've got exactly that. All right, so we've had our third range boundary, the Bollinger Bands, payout prices, breaking the previous high points somewhere around that. That was just a catch-up event, which to me was an opportunity to put some more trades into this thing. And now, as you can see, the context is crossing over the rising moving average, okay? So that's really the way it is. It's just exactly how it goes. The flow number 2 is now full sequence. What's next to come? Let it be until there is a third range boundary, okay? So as long as there's no third range boundary, there's nothing you can do and nothing to worry about. Right now, in order to get a third range boundary, prices would have to break that, okay? So for now, we're breaking higher highs, and you got to let that happen, all right? Don't try to forecast the market maker's moves. It could very well keep grinding up or just give you a bear move and then up again and so on. All you know is that, well, as long as it doesn't sufficiently enough go lower, and as long as it doesn't rebound to make a third range boundary afterwards, there's nothing you should worry about. So let it be. Let it behave. None of your business. You're in the right side of that trade, and now you're in a risk at break even, which means your trades are safe. Damn it, let them behave. All right? So that's exactly what I do. When it comes to silver, I've been asked for a quick update, but that's still the same old story. We could have flows in here in the daily or weekly charts. Both actually have viable context to trade these. Anyway, they both have the same structure. So in that sense, well, you could do daily, weekly, who cares? Just be assessed that when you have an overlap between two potential time frames, that generally means the true answer is right in between. That means the higher time frame might be a bit laggy, just like the lower time frame might be a bit harsh and violent in terms of signals, okay? So try to navigate in those shadows and those troubled waters and figure that one out. Of course, the higher time frame is always going to be the lower risk to trade, okay? This one seems to have been the case in here. As you can see, first flow, and we would have bought the moving average in here, okay? So we would be expecting now on the same old structure, same thing. Has you figured out the time frame? Where are you? We've seen the first flow. It's been confirmed. We've seen its third range boundary. We've seen the positive reaction on the moving average. Could still go lower to the Bollinger Band, but for now, we've seen a positive reaction on the moving average. What is next? This one, okay? We wait for us to break the previous top, and then we should see the flow going full force as prices will climb faster than the moving averages, okay? So that's really the way it is. So the stance we're in now is that we've had a positive reaction over the moving average. We're waiting for the market top to be broken. So in terms of silver flow trading, I don't nearly give a fuck until we get to $28. Yes, we're at 23, and yes, I don't give a fuck that there are $5 to go higher, and that some people think it's irrational to see $5 moves in such. Well, look at that. Back then, it's been happening in a couple of weeks. So could very well happen as well in such short notice. Who knows? This is time-related information. There's nothing you should pay attention to, all right? These things can go fast, can go slow, can go faster than you think, slower than you think, and that's really the way it is, okay? All you know is that all that matters is once we break the previous high points, you will be sufficiently risk limited enough to put all those trades at break even. Until then, well, dive into the uncertainty pool. There's nothing in there that you can do about it, okay? Just let it be, let it behave, all right? When it comes to cryptocurrencies, hey, sorry folks, I would like to bring you answers, but I just can't. So same story in here, just put your head aside from what we do in the lower risk time frames, in which there could be a lot more subjective stuff. Like I told you, I expect volatility in cryptos for multiple reasons and stuff like that. We didn't really knew which side and direction this volatility could express itself, so I was very like, yeah, don't give a fuck. Either. But the thing is that I've seen so many people in here saying, yeah, the flow is fucked because of Binance, whatever. Well, it doesn't make any sense to me. So same old story in here, go easy. Don't put yourself into too much constraint. Just make it easy, okay? So we've seen 4-hour charts in here. We said this is a weird type of stuff because we didn't really have a third range boundary. Still, we had an expanding wedge instead. We've gone back to the moving average, rebounced, and that's pretty much all of it, okay? So we've gone straight up. So the sequence would be first flow, second flow on the H1 time frame reference, okay? I could basically just write it down. That would be good to do. What am I using for? I think I'm using this. I don't remember if that's it. Yes, sorry, that's it. So that basically is our first flow, okay? Now we'll be going on for the second, okay? So we're second flow in. This one has been rebouncing on the moving average, broken the previous high point, okay? So we know where it is. Everyone who's been trading below this high point is stopped at break even, okay? And until then, we let ourselves behave. We still haven't built a third range boundary. Remember, we've reversed the context, so here is where we need to go now, okay? Here's where we have to go, and if we reject that area, this is where you want to take some profits, of course, if you want to take some. And if the market rejects that, we're going to let it ride until it goes to the Bollinger Band, okay? So if you want to put it into context to see where it is, the Bollinger Band right now stands at 21K, and basically, yeah, it's going to keep rising. So if we go higher, reject the third range boundary, you know that this is where we're headed next, okay? And this is where you will buy again. Okay, so if you've been trading that flow, the third range boundary is where you will likely profit take, okay? And if this profit taken area is sustained and rejected, then the next buy entry is going to be there. And that is just following the same old sequence. As you can see, it's been working just fine for S&P 500, working on silver, working on Bitcoin, just on different reference time frame. And as you can see, the flow sequence varies a lot. I mean, the price sequence in those different flows varies hell a lot. It's just the underlying sequence, like going back to moving average or this or that, and following. This underlying sequence is subsequently the same on all of these different assets. Different time frames, different asset classes, and as you can see, it's kind of the cheat sheets for actual flow trading. As long as you know this sequence and you boringly apply it, you will see that you will get far more reliable trading answers than just listening to the news flows or getting impacted because the broker just plays around your feelings. All right. So in terms of Bitcoin, the answer is still the same as it was back then. I don't have the answer yet. Prices have to test 30K first. And if 30K is rejected, then I will not be a buyer of Bitcoin until we get to the Bollinger Band. I don't know how long it's going to take. I don't know how violent it's going to be. Could very well be just like that. I don't give a fuck. All I know is that whenever we trade that Bollinger Band, I'll be here to buy. All right. That's it. That's basically it. Whenever we get out there, as you know, I have been buying in this area, so I will ask myself that very tricky question. Do I want to take my profits and therefore risking prices fucking the third range boundary and therefore missing gains? Or option number two, I would also be avoiding a loss. If the prices were rejecting here and going lower, I would potentially have to invalidate this trade. So as you can see in here, I'm probably going to have to take profits anyway. The question is just how much profits. Am I going to take 30% off the table? I'm going to take 40, 50, God knows right now. And like I've said back then, it mostly depends on the types of signals that I get. If for whatever reason you would just fuck it all across the board and just go all immediately making new highs, then I know that I don't need to do any. All right, so that's really the way it is. So we'll see all about that. I don't have the answers so far. All I can say is that the third flow, okay, the third flow sequence, sorry about that. Yeah, we'll go back. So the third flow sequence, okay, cannot happen until this. That means the Bollinger Band has to be tested. So I've seen some people questioning whether we would have started the third flow in here, saying, yeah, we've got a somewhat of a weird consolidation. I can't figure out the third range boundary, but still. Can we have a third flow starting on the Bollinger Band, on the moving average in here? And therefore we would have flow 1, flow 2, and here would be flow number 3. No, that's not the case. Remember, the rules are strict. The rules are fucking simple. There's no way for you to bend them around the place, okay? The rule says Bollinger Band, okay? So the third flow always starts from the Bollinger Band. So as long as we don't go out there, and this is a dynamic level, it will adjust over time, as long as we don't touch it, there is no third flow, okay? So that means we're still trading the second flow. Where are we now in the pattern? We are here, okay? We still don't see a third range boundary that has been subsequently traded, okay? Remember, delayed third range boundary is to be traded again. So that's the way it is. Even if we had a delayed third range boundary, we have to go back to these prices and reject. And even if we reject, we're going to have to wait until the Bollinger Band goes in to consider the third flow potential tradable area. All right? That's really the way it is. Don't make it overcomplicated. The rules are what they are. The only complicated stuff in flow trading is to prevent yourself from getting impacted by external factors. Ethereum, well, same story as you can see, slightly different, but that's the same game. We've had flow number 1 in here. We're going to pull it out so you get it. Okay, so flow number 1, it's been going up pretty much same weird stuff as Bitcoin back then, which means we hardly see the third range boundary because of those expanded wedge structures, which are very rare, but still happen. Then we see the second flow starting out of the Bollinger Band, and so far so good, we're still in. All right, as you can see in here, we've had a delayed third range boundary, okay, broken the previous low point and so on, okay, but the thing is, sorry folks, we need to go back there, okay? Delayed third range boundary doesn't count, okay? We need to see the third range boundary rejected. So we go back to context once again, and we go lower afterwards, and then buying the Bollinger Band. Same thing as it goes for Bitcoin. It could be more bearish, but it has to go higher first. Option number 2, we go out there and we pass through. And if we pass through and make new highs, then what's going to happen? Yeah, the second flow is extended, and we're still going further and further, and we'll still be in the second flow, okay? So same story out there. I don't know if the second flow has already terminated, and we're just consolidating already ahead of touching the Bollinger Band, letting it contract, or option number 2, we're just going to go full force, relaunching the second flow. And so far, I don't have the answer. The decision point is going to be the same story, $2,000 for Ethereum or somewhere around that price. Bitcoin is for 30K, so we're going to have to go back there and see what it's like. Okay, if the price is rejected, then the next trade is going to be the Bollinger Band, and God knows how long it's going to take. Could be a boring summer for cryptos eventually. Could also be a very, very bullish stuff. We know that right now the market is very sensitive to external catalysts. We've seen Binance earlier yesterday, and I'll do a review of that where I think it's standing in my big scheme of thing. But the second stuff, it also, well, a bullish catalyst could just emerge in a couple of days, and the market could just very well fuck through the 2030K marks. So I don't have the answer. All I know is that this is where I'm going to do something. Whenever prices go 2K, 30K for Bitcoin, I will look at the price structure. And depending on the technical signals, I will probably either way trigger some partial profit taking, and that the amount of those partial profit taking still depends on the signals I'll get out there. All right? I'm not going to limit my gain either. Been taking some risks. I'm definitely forecasting some potential more gains to come. So I know it's going to be partial profit taking. I hardly think it's going to be a whole 100% taken off the table. All right? But yeah, it's not going to be 0. It's hardly going to be 100. I think minimum is going to be 33%. So I think 1/3 of the position is going to be taken away. The question is, well, is it going to be 1/3, 2/3? I don't know. Okay? Depends on the price tags and the signals that I'll get whenever we trade this interesting area. And the other way around, because always can happen, okay, if prices decide to go lower and then go for the Bollinger Band now, then I'm probably going to have to take a stop loss. And that doesn't mean taking a stop loss out of these trades will prevent me from buying again the Bollinger Band. I will definitely do it, all right? So that's the way it is. You can't make 100% successful trades, and if you're trying to avoid losses in trading, you should just avoid trading at all Okay, so that's really the way it is. Losses are part of the game. Personally, it doesn't do anything to me. It can very well happen. The market will make its own choices, and don't try to put it any other way. Okay, that's really the way it is. See you guys next week.